Hello, you're watching Hot Stocks. I'm Refilwe Sisiane. My co-host is Simon Brown from Just One Lab. Today's show is all about precious metals, and we ask, is all that glitters still gold? By looking at the yellow metal as well as silver and platinum. Our guests are Chris Hart from Investment Solutions and David Liebenstein from Lakeshore Trading. Gentlemen, welcome to the show and thank you very much for joining us.
Thanks very much.
Send your questions, comments and suggestions via email to hotstocks@cnbcafrica.com and send your tweets to the address at hot_stocks. This year's heady bout of risk aversion on financial markets has pushed up the demand for gold as a safe haven asset, to such an extent that some investors consider it vulnerable to a sharp sell-off should the global economic environment improve, or simply because the price of gold has been too high in the absence of outright financial catastrophe.
Gold, obviously, we don't have market caps, price earnings or anything, but I got a Kruger Rand here, and that is 14,000 rands worth, and I could probably fit 100 in my pocket. It would jiggle. It would certainly be a big pocket. David, let's start with you. I suppose the point being, we were talking before we came on air, 10 years ago that the Bank of England was selling their gold. I mean, they were basically giving it away for a couple $100 an ounce. We're now sitting at 1,600. That trajectory has massively been... Let's first start with some pure price stuff. We saw that spike above 1,900. We've now seen a pullback to 1,600. We've got a 50-day moving average at about 1,500, a 200-day moving average down just around just below 1,200. Where to in the short to medium term? Are we going to get more downside, or do you think it's forming a base at 600?
Well, I think, when we consider this current bull market in gold, as you say, it started in the 2000 at $250 an ounce. This is not the first time we've seen one of these. I call it a correction. I certainly don't see it as the end. And what a lot of people don't realize is, there were certain suspicious events happening during this pullback, and if I may, I'd just like to discuss them very quickly. First of all, generally speaking, markets are extremely volatile and very difficult to predict in the short term. But when this takedown in gold began, there were huge quantities offered at the weirdest time imaginable on the futures markets. In other words, if you want to sell a share, or if you want to sell a commodity, you'd like to sell into strength. The big selling started like 2 in the morning when there were no buyers, and it was market orders just hitting the bids, so that was a $120 drop. There were no buyers. So someone was out there to make a statement, certainly not trying to just liquidate a position, because they were determined to engineer the sell at a price where there were very little buyers and a price where the market is not really active. That is the first thing. The second thing, as the selling happened in all markets, through my sources, I was told a lot of hedge funds had to liquidate gold and silver positions to pay for losses that they incurred in equities.
They wanted money, and the only place they could get their money was by selling gold. I want to come back to the engineering statement. I mean, the issue there is I can manipulate anything in the world, give me enough money. Eventually, I run out of money. I can't manipulate anymore. At some point, it has to ultimately go free. I know a year or two back, some of the big banks in the US had significant short positions in the gold market. Those have certainly been paring back, have they not?
Oh, absolutely. In fact, remember we used to talk about, the 8 or less bullion banks, their net short open position in gold was roughly about 35 million ounces.
And that was at about $1,100.
And remember, they didn't change it. It just they kept on selling it more and more. Right now, interestingly enough, that's been reduced to about 19 million ounces. So it's the lowest open net short position we've seen in years. With silver, they used to have an open net short position exceeding 350 million ounces. That's right down to 200 million ounces. So this is a very good sign that, the commercials, the bullion banks, have reduced their net short position. So it's a very positive sign on the market for both gold and silver. But the third thing, the third thing I'd just like to mention is also that during this takedown in prices, the CME happened to increase margins once again. There were increased margins in a falling market. There's something very suspicious.
And again, that then leads to liquidation. People need the cash.
Absolutely.
Chris, bringing you in, one of the core stories behind gold has been, we've got currencies that are being debased, and I mean, again, today, the debasement story is not new. Everyone's heard about it. The printing presses are, they're going to run out of trees one day, and that's when they're going to stop. And that's been the key driver behind gold?
It's been an important driver because it's a monetary role. Look, one of the huge stories is the actual sheer strength of physical demand that's prevalent underneath this gold market. And that's why I suspect around $1,600 we've just seen physical demand, and particularly in India, China, saw the actual sale of things like coins in Europe, and the US is also very, very strong, indicating that there is a concern. And now that debasement that's been concerned is really symptomatic of a number of things. Is that the debasement is part of a comprehensive policies which include things like huge budget deficits, it's that deficit spending, it's that huge government debt. So you've got what I call systemic instability. All right? And when systemic instability occurs, your normal refuge from risk, being cash and bonds, right, now starts to become the epicenter of risk. So you take, for instance, an Italian pensioner, all right, can't take a loss on equities, so you should have safe assets like Italian bonds.
Now, US debt, so. Which got downgraded.
And the US debt. And so when you've got that systemic instability, gold is an asset which is reasonably accessible, also silver, precious metals, it quite easily portable. Diamonds you can use, but they're not easy to value, and its beauty is in the eye of the beholder, kind of thing. I certainly wouldn't, but you could, you know, it's like that. And when you've got that systemic instability, you need those hard assets to carry from the period of systemic instability when it starts to when you regain stability. Just think, for instance, the last time we really had a systemic collapse was at the end of the Second World War. And you can just think anybody trying to escape, you know, Germany didn't go with a bag full of Reichmarks or government bonds.
This is where it works.
Exactly, that's where it works. And when you get to South, when you get to South America, you don't hang on to that. Because you're back into, well, South America is not exactly, but if you just go with it, at least back to systemic stability, where you converted back to something that is key, because a currency has two roles. One is a transactional role, which we most use, but investors use cash, the second role, which is a store of value. And when that breaks down, then you need to actually go. So debasement risk and default risk on bonds is basically why precious metals are doing so well.
And so do you think that gold is hot or not then? Are you bullish on the price of gold?
I think gold is still very hot. Silver is still very hot.
And you're not worried about a more significant pullback? You also think there's a base forming around that 1600?
You know something, even if there is more of a pullback, volatility recedes in significant as you have time, and I think we've got at least another 3-4 years to go in the gold market. I think what's happening is that the gold market has shifted from the transformation of its role from in 2000, when it was a volatile asset that you traded it aside. It's now being seen as a safe haven asset, but our funds, our investment managers actually don't have it. It's a very small portion of assets. They're still holding cash and bonds. So we now go in the next few years in what I call the accumulation phase. And the trajectory of the gold price starts to actually accelerate from here. So it's not yet a mania stage at all. It's the acceleration, it's that accumulation phase that we're going to enjoy over the next 3 to 4 years.
David, when we consider gold and other commodities as an asset class, I mean, you're not going to be earning any dividends or any yield from it. It's purely a bet on the price. And my concern is that surely we should be holding this more as a hedge than as an investment.
Not at all. Because,
not at all?
No, because let me just give you an example here. 3 years ago, you would have paid 7,000 odd rand for this Kruger Rand. Today, it's 14,000 rand without a dividend. I don't think that's a bad investment at all.
But the only way to realize it is if I sell my gold.
It's same as an equity, same as a commodity.
Right.
You know, you sell it, you convert back to cash. But as Chris said, a very interesting thing here was that one of the main reasons why people invest in precious metals, particularly gold and silver, is because basically it's an alternative to the fiat currencies. All the currencies around the world are fiat currencies. Basically, they're paper currencies which trade against each other. There's no intrinsic value behind them. Chris just mentioned something about a diamond. Gold and silver have a history behind them. Going back thousands of years, have always had a monetary value. Now, when it comes to fiat currencies, practically every single fiat currency in the world has failed. So people say, yes, but it's a US dollar, the euro, there's no chance of it happening. Well,
until they get downgraded.
Yes, there is a chance.
Sorry, I don't mean to cut this off, but we still have to look at silver and platinum. I can see this conversation around gold is really getting heated. Simon Brown, you famously said that if someone gave you a gold mine, you would give it away.
A gold mine, most definitely so. Gold, I got to say, this, I like this in my pocket. I still think there's more downside in gold, and I start to wonder. But the truth of the matter is, I've been fundamentally wrong on gold the whole way. I thought we'd have some fun with it. I thought we'd go places, but the stories that Chris and that David have been talking about, and I've been telling me these stories for years and years. Bottom line, it is moving. And
are you changing your mind?
I'm not rushing out to buy any just yet, not just yet. But the point is, it's moving, and it's important. It's got the momentum. Where it's going to next, who knows? But gold is hot. It's happening. The trend is up. It's well above all its averages.
Gold is hot. Looks like all that glitters is still gold. Moving on now to silver. Silver is used in more industrial applications than any other commodity apart from oil. And with Chinese demand for silver tripling between 2004 and 2007, the industry has had no choice but to create new ways to own the metal.
Silver, again, this is a kilogram of silver. I don't know, David, what's a kilogram of silver worth at this moment in time?
Right now, close to about 10,000.
10,000, okay, but these I can't put in my pocket. They won't fit. Silver, different to gold in a couple of senses, and the one set, well, two things. It hasn't yet reached all-time highs, and secondly, significantly more volatile. I mean, we had it up at 48 down to 24, yes. A lot more volatility. I mean, imagine that's a liquidity issue.
Well, no, I think silver has always been a more volatile metal than gold, but the interesting point that you did say is it's like 40% below its all-time high, which occurred in 1980. It just traded above $50 an ounce. So as far as I'm concerned, once again, silver is incredibly undervalued at this current level. The gold-silver ratio now is nearly close to 55. We haven't seen that for a time. But generally speaking, silver, obviously, it's not the market is not as big as gold, but it has always been more volatile than gold.
Chris, does silver have a safe haven status? I mean, obviously gold is the safe haven. Silver's got a lot of practical uses in medicinal and the like. Is it viewed more as that?
It's an incredible metal in terms of its properties. And as you said, even its antibiotic properties, and you'd use silver, for instance, to treat burn victims, where the biggest risk is infection. It's one of your key ingredient, but it's got so many photographic, obviously that's falling away, and that's why people are so bearish in a sense, because that was quite an important use of silver. But silver's always had a monetary metal. You'd use a gold coin in the older as you would a note, and then for smaller change you'd have silver money. It's always been like that, and then you'd have your coppers. All right, but money has been debased to such an extent. I was just holding this, and this is the $100 trillion Zimbabwe dollar note, and it's got the irony.
A loaf of bread, I think.
I promise to, no, not even a loaf of bread. It's actually worth, the paper is worth more blank than it is, printed. Other than it's been in our collector's item, but it's still got.
Chris,
I promise
I really
to pay
hate to cut you off. I really do, but I just need to get your view on silver. It sounds like you're quite bullish.
Silver's hot.
Hot for you.
It's hot.
Okay, David. How do you feel about silver?
Oh no, it's extremely hot.
And you're extremely hot carrying all those bars around. I hope you've got enough security.
I hope so too.
Simon Brown, how do you feel about silver? Hot or not?
I like silver, I like the medical use. The volatility spooks me, but I can't help wondering if it hasn't perhaps got a little more upside. But I think the average person just knows about gold. Then you get the other people perhaps who are a little more involved in the space, and then they get to the silver side. The volatility would spook me. You need a strong stomach, but at its current price, I think it's got perhaps more upside, certainly in the short term.
It's hovering around $40 right now.
No, it's down the 30s.
Down to 30?
Yeah,
okay.
So I think definitely silver be my pick of the two right now.
Silver is hot for Simon Brown. Thank you very much. Coming up after the break, we'll look at platinum. Don't go away. Welcome back to Hot Stocks. We turn our attention to platinum now. South Africa accounts for 80% of the world's platinum output, with Anglo Plat and Implat as the two biggest miners. With its strong positive correlation to industrial demand, the question is platinum better classified as a true industrial metal rather than as a precious metal?
Chris, let's come to you first. I think that is the issue.
Yeah.
We're talking precious metals.
Yes.
Platinum's undoubtedly a precious metal, but it's never been viewed as a currency.
No,
it really,
it's not.
it's industrial.
No,
it
it
is
is-
some jewelry,
it's-
but really it's going into my motor car to save the planet.
Exactly. Gold is by far the strongest as a monetary metal, and silver a very close second, but platinum doesn't have a history of being a monetary metal, but it does have an investment dimension to it, right, where I do believe that any bull market in gold, right, even if you do see an industrial demand fall away, that you will actually see platinum dragged up.
And I want to
with
touch
it.
on that. A couple of folks on Twitter said to me, ask this question. So
Yes.
typically, except for a brief time in 2008, platinum's been above gold.
Yes.
That's now inversed.
Yes.
And it's now that gap's actually getting wider. Is
Yes.
platinum going to go back above gold, or have something changed fundamentally?
I think it can go back above gold, sure, but I have a feeling over the next, say, while gold accelerates, I think platinum will lag gold, and you may well find in the second half of that accumulation phase people resorting back to silver and gold. So I think gold will lead it up certainly in the next, say, 2 years, and then you might actually find it reversing. But the key problem with platinum is, as with copper and base metals, as the global economy starts to
Demand
dip,
disappears.
and I think so. You may well have a lag where your investment demand will pick it up, rather that the gap has got too big and then just start to be dragged up by that. It is a smaller thing, and the South African producers do have some influence to actually, because it's an 80% supply, can actually pull some supply, cut back production. But at the end of the day, it will lag, I think, for the moment.
David, Chris touching on the global demand for platinum, and it sounds to me like it's more of an emerging markets question. Chinese growth in the third quarter is expected to be not so shiny and bright, and there's a slowdown there in the economy. Are we really concerned about the resilience of the Chinese economy or the price of platinum, or is it both?
I think it's both, because China has developed the largest automobile industry in the world, and that is the big use for platinum and the auto catalysts. So if China does have a slowdown, obviously the takeoff for the catalyst will be slightly less. But generally speaking, I think we have a good upside for platinum, because whilst the auto industry is the largest user, it is used in jewelry as well. And at the end of 2010, supplies are very tight, because in 2009 there was a bit of a surplus in platinum. Coming into 2010, something like, I think, 650,000 ounces were taken by ETFs, which were only introduced in 2010. So there's also a new dimension in platinum. It's not only used as, the main use is for in the automobile business. Yes, it takes off maybe about 60%, but investment demand is picking up. Yes,
But it is a green metal, and that's quite an important thing. And so I think there are new uses, besides just auto catalysts. Huge industrial plants can use it.
And so for you, Chris, hot or not
So
platinum?
it is reasonably hot.
Reasonably hot. Lukewarm for Chris. David, how about you?
No,
Hot
not
or not?
lukewarm.
Reasonably hot.
I would say the same, actually. Yeah.
Reasonably hot for David.
Reasonably hot, yeah.
Simon Brown.
Short
platinum.
term, I think not. We're seeing growth. We saw some good numbers out of the US today in the retail space, but still global growth is looking anemic. I think that's going to take some of the shine. I hear what Chris says, that gold's going to lift it up, but I wouldn't rush off to throw money on platinum just yet. When we start seeing global growth pick up, then hot again.
Right. Gentlemen, we have had a lengthy discussion around the three metals. Let's now find out of the three which you pick and how you would invest. David, we'll start with you.
Definitely silver. Silver has been one of my favorite metals because of the volatility. I think it has the largest upside potential. We're sitting at a price of roughly $30 an ounce. It's 40% below its all-time high. Several people are looking for silver to go up to $180, $200. I've even heard the figure $500 an ounce.
Are you that bullish on silver
No, I'm
yourself?
not. No, I would love it. Then I'm retiring.
You'll be happy with 100.
I'll be happy with 100.
And you're physically looking at the bars.
Well, you see, there's a difference between the bar. This is a US silver Eagle. So, funny enough, the last figures up to date, they've done 34.4 million up to date this year, which is almost equivalent of the entire production last year. So there's a lot of demand in the Silver Eagle, but it has an international recognition. Silver bars don't really, they might have to be assayed when you come to liquidate it, but a coin, it's like a Kruger Rand. You can sell it, it's 140 countries will take it right away. The bar, yes, you can sell, but it might need an assay before. So I'd do a core holding of bars and a small percentage in a smaller denomination of like the US Eagle.
So you want to hold silver in its physical form then?
Absolutely.
Chris, how about you?
Well, I think this market is starting to move on, and especially with the crisis in Europe and the US is getting worse. It's not as if that it's crested and you can say, okay, it's bad, and these countries are broken, okay, and you've got a procession. Greece is going to default, and there's a whole procession that's still going to be defaulting beyond that. So I like gold, okay, but I would now say the rise in price is now going to pull away from the cost base, and because of that you're going to get that leverage effect. And I still would go for the large cap gold producers before I'd actually attack the small cap, because there's a bit of a lottery. You have, you know, a bit of a, you know, production stability is at least, you know, more certain with the large caps, and that's where your institutional funds will actually move first. And so it's the large cap, Harmony Goldfields and Anglo Gold. But you know, if one could go internationally, there's more choice, but we don't really have that much choice there.
So David's choice is silver bullion, and Chris is going for the large cap gold stocks. May I hazard a guess that you're going to choose platinum, Simon Brown?
No, I'm going to say I want to see the gold miners produce first. I'm going to pick silver, and I'm going to also confess I'm long silver. I have a silver coin. I confess double. David gave it to me about 3 years ago, so I'm 100% up in my silver stake. If you can handle the volatility, I think some silver.
Fantastic. Gentlemen, thank you so much for joining us. That's all we have time for. Our guests tonight were Chris Hart from Investment Solutions and David Liebenstein from Lakeshore Trading. From me, Refilwe Sisiane, my co-host Simon Brown from Just One Lap, and the rest of the Hot Stocks team, it's goodbye for now.